What if I told you that mastering breakouts could be the key to unlocking your potential as a trader? Well, let's talk about that. So a breakout, this just happens when the price breaks beyond a defined support or resistance zone. And oftentimes it's accompanied by strong volume. This movement will often signal the start of a new trend. So let's talk about volume. So a true breakout is often characterized by an increase in trading volume, signals strong market conviction. And for some traders, this is an important indicator when trading breakouts. But you should know that we may not see high volume right at the moment of the breakout, and that is perfectly okay. What we need to see, though, is a subsequent increase in volume soon after the breakout. If the volume fails to rise, it's wise to consider scaling back your position or just exit the trade. But not every breakout is genuine. Sometimes the market plays tricks on us, right? And these are known as failed breakouts, often referred to as a bull or a bear trap, just depends on the trend. So in a failed breakout, price may exceed the key level, but it fails to maintain that momentum. And this will often occur with low volume, though that's not always the case. But it just indicates insufficient market support at those prices, and it can absolutely lead to a rapid reversal. So to effectively distinguish between a true and a failed breakout, keep an eye out on the retest. So a genuine breakout will often revisit that new support or resistance zone. It just demonstrates that the price can now sustain itself above or below that zone. And if it does it, it confirms the market's commitment to this new trend. So here we see a true breakout. We see a successful retest. We see strong volume pushing the price higher. Now here we fail to sustain the breakout during the retest. We see volume fading. There's just a lack of conviction. And one great way to see if there's a higher probability of success is to look for price to form a range or a base, either just below resistance or above support. In fact, if you can position inside these bases, you're going to set yourself up to already hold a position on that breakout, which will lead you into profits. And that's another video for another time. Now, true breakouts, these can lead to significant price movements. They can lead to new trends. So it's an important focus for traders because when a breakout does happen, there's a shift in market dynamics, and it may only be brief, but it indicates that supply and demand have reached a tipping point. This shift can result in increased volatility, can result in large price swings. These are essential for traders that are looking to capitalize on momentum. I think breakouts present excellent opportunities for traders to enter the market with a higher probability of success. When you can identify key support and key resistance zones, you can then position yourself in these trades. What I mean by that is you can enter a trade just above resistance, just below resistance, and it's going to allow you to ride the wave of momentum because price continues to go up, and those who want to go short think about below support or just on top of support. When you can master this art of distinguishing a true breakout from one that's probably going to fail, it does require a solid understanding of price action and volume analysis. But if you can integrate these techniques into your trading approach, you can sharpen your skills over time and absolutely boost your returns when you're trading.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.